Let's be honest, stories about interest rates are not always interesting. So we thought we'd visit somewhere that's anything but dull, but where the ups and downs are still pretty daunting.
So are you a roller coaster fan?
I mean, a fan would be a stretch, but I have been on a few roller coasters in my time.
Vic Harris is the founder of The Curve, a financial education platform where talk of interest rates is increasing, just like the rates themselves.
Kind of hasn't been a discussion for a number of years because it hasn't been an issue. So now interest rates are increasing, people are seeing the impact.
This is slightly daunting.
The rate you pay to your bank is being pushed up by the Reserve Bank's interest rate, which over the past 7 months has seen the biggest jump in more than 20 years. In early October, we were sitting at 0.25%, our lowest ever. Now, following 5 rises, including 2 big jumps, one in April and one last week, we're at 2%. And where are we feeling that?
You're seeing mortgage rates nearly double, and that can have a huge impact on your disposable income and what you can spend. And then that flows on to, you're not spending on restaurants or clothing stores, and then they're not doing as well.
Back on steady ground, but mortgage broker Jess Pronk admits a lot of people are feeling anything but.
Some are resigned to the fact that it's happening, but there's a lot that just are not prepared. They're just not prepared for this to be happening.
It's time, says Jess, to really look at where you're spending your money and to consider all your options, like breaking a current low-interest loan now.
If you've got a rate coming up in the next couple of months, it may be worth actually locking in now at a slightly higher rate or much higher rate and having a bit more security for the next couple of years.
Or extending the term of your mortgage.
If things are really stressful, you should be okay to start looking at maybe extending out your loan term. Typically, you can't do that with your existing bank, because a lot of banks will look at that like financial hardship. So what we find is that a refinance, so switching banks at that point, gives you the ability to refinance your lending, possibly take advantage of some cash back, but also stretch that loan term back out again as well to make those payments a little bit more affordable.
And possibly going interest only.
It's an option, but we're just not seeing it come through voluntarily from banks. I think, and I hope that will change. I hope that they can look at the current environment, fuel costs, food costs, and start to look at providing that as a form of relief.
So, is there light at the end of the tunnel? Or given interest rates are the way the Reserve Bank tackles high inflation, not yet.
All signs are pointing to they will go higher. We're still seeing inflation at super high levels, and there's no signs of that normalising.
So strap in, there are some bumpy times ahead.